Hello, everybody. This is Matt Fick from Financial Life Planners, and this is your stock market update for the week of May 5th, 2026. The market has steadily recovered from the downturn that we had that bottomed out in April. And I wanted to give you some updates on that, show you some charts. And I wanted to compare the market right now to the market of a crash just to demonstrate what the lead up looks like and where the differences are between that historically and where we're at now. So I will start off like I normally do by showing you a chart of the S&P 500. And here's the chart of the S&P 500. So you could see the pullback that we had in March and into April of 2026, and then this pretty significant rally that we've had since then. We also see a pull down of the 50-day moving average, turning it down in mid-March, but we did see the 200-day moving average stay steady. It flattened out a little bit, but is still overall positive, similar to what we saw in the pullback in April of last year. And here is the NASDAQ, pretty similar chart. Saw some basing at the end of last year and beginning of this year, and then the drawdown before a pretty big gap up again. Similar turn down of the 50-day and the 200-day staying steady. So right now, even though we have had a pullback in the past month or so, a pretty bullish look overall. Now let's take a look at some historical charts of the S&P 500 and make some comparisons to now. This is a chart of the S&P 500 starting in 1999 and ending just before the end of 2002, October of 2002. As I'm sure many of you are aware, if you know a little bit of stock market history, this is a chart of the dot-com bubble bursting in 2001. So you can see the lead up to the peak in mid-2000, August of 2000. And these lines here are representing the moving averages over different variables of weeks. So the shortest being a 50-week moving average. So again, when we look at those other charts, those are showing 50-day moving averages. So these are longer time frame moving averages, which would show the trend is a bigger unit than the shorter term ones do. And then intervals of 5 weeks up to 75. And then this dotted line here is a 110-week, so just over a 2-year moving average. So you can see here in 99, the price of the S&P 500 well above all the moving averages, which is a good sign, shows growth is a bullish sign. And when it does cross the moving averages, like here in October of 99, again in 2000, a few more times, you could see that it finds support at those moving averages, which is a good sign like we've talked about before. Midway through 2000, though, we see it slice across the moving averages and then try to test the moving averages on the upside. And instead of finding support, we see that it finds resistance, which is a negative sign. Then you start to see the long-term moving averages start to be above. So again, orange being the longest term, the 75. On the downside is above the shorter term moving averages, which again further show a sign of a pullback. And around where the 110-day moving average is crossing over these shorter term moving averages, you can see a full downward bearish signal. And now I'll show you a chart of the S&P 500 today. This is looking back from May of 2023 to 2026 of this year, so another 3-year chart or so, and you could see a pretty substantial upturn with the price of the S&P 500 testing these lines a few times, coming back through here rather quickly. Though this was in April of last year where it crossed, but the lines are never turning down, and again another support line here, bouncing back up after this pullback that we had in April and March of this year. Notice too that the trend lines, like I said, are substantially heading from the bottom left to the top right. Obviously, that's a good sign, but you could see when the market started to pull back, these condensing a little bit, that moving average is getting closer to each other, starting to cross. Obviously, they crossed later in here after the market's already pulled down. But condensing, flattening out a little bit before slowly turning down. Whereas if you look at today, we did see a little bit of a condense right here, but once again, still looking positive overall. Now, that doesn't mean that the market is guaranteed to go up. We're good to go and keep riding on this bullish movement that we've had. But what the chart is showing us is historically that is what that has meant. We are still moving with caution, though, because what had started this pullback back in March has not necessarily been resolved. There still is some uncertainty with what is going on in Iran and how that is going to impact the market, how that is going to impact the global supply chain, and things like that. That hasn't been fixed yet. So there is still that uncertainty, but right now the market has kind of separated itself from that and is showing some bullish signals, which is a good sign. But with that, that is all I have for you guys today. I apologize for some of you who don't like the charts. I've gotten some feedback that some of the heavy episodes are difficult for some people to watch. So I hope I made it as easy as possible for you. And we will look forward to talking to you again for the next market update next week. Have a good rest of your day. Have a good week. Happy Cinco de Mayo. We will talk to you soon. Bye bye.